All right, today we're digging into the story of CF Industries. Now, this is a company that's a huge player in hydrogen and nitrogen products, and their story lately has everything. We're talking record-breaking profits, a sudden and totally unexpected disaster, and a massive multi-billion-dollar bet on where energy is going next. So, let's get right into it. So picture this. You're a company that's just had an absolutely fantastic year. Then, right in the middle of all that success, bam! Disaster strikes one of your most important facilities. So what do? Well, if you're CF Industries, you decide to double down on a gigantic pivot towards clean energy. It's a wild story with three really distinct parts, and we're going to walk through all of them. Okay, first up, let's talk about the good times. Because, before all the problems hit, 2025 was an absolutely phenomenal year for CF Industries. And the headline number really says it all, almost $3 billion in adjusted EBITDA. Now, for those of you who might not know, that's a key way to measure how profitable a company really is. It's just a massive figure that points to incredible performance and a super strong market for their products. Seriously, this is the kind of year most companies only dream about. And it wasn't just one big number. They were consistently outperforming expectations. You can see right here how they finished the year strong. In that final quarter, they beat what Wall Street predicted on both earnings and revenue. So the key takeaway here is that they were riding some serious momentum. And all that success? It went straight back to the shareholders. The company returned a staggering $1.7 billion to its investors. To put that into perspective for you, they bought back nearly 10% of their own company's shares in a single year. Things were looking incredible. And then, an incident happened that would seriously test the company's resilience. This is the big pivot in our story, where everything changes. So, late in 2025, their major facility down in Yazoo City, Mississippi, had a significant operational failure. Now, the most important thing is that nobody was seriously injured, which is great news. But the damage itself was bad enough that the entire complex is expected to be shut down until at least the fourth quarter of 2026. That is a long time. And the impact on their production was immediate. You could see it right in the numbers. The company is now projecting a drop of more than 500,000 tons in its ammonia production for 2026. That's a direct hit to their output, all coming from that one incident. And here's the price tag. The company is bracing for a $200 million negative hit to their profits for 2026 just because of this shutdown. That is a serious headwind. Now, they do expect to get some of that back through insurance, but still, it's a significant financial challenge they've got to overcome. So how does a company even begin to absorb a $200 million hit like that? Well, this is where things get really interesting, because the market around them provided an unexpected and very much needed cushion. This quote from the company's chief commercial officer really sets the scene perfectly. Just when CF Industries was facing these huge internal issues, the global market for their main product, nitrogen, became unusually strong. It's a perfect case of a rising tide helping to lift a boat that's just sprung a pretty big leak. So why was the market so good to them? Well, it was a whole bunch of factors all happening at once. You had surging demand from agricultural powerhouses like India and Brazil. At the same time, the global supply was squeezed because of production issues in Europe. China wasn't exporting as much, and, there were just general geopolitical risks. It was a perfect storm that kept prices high. And that helped offset CF's production problems and gave them the stability they needed to think long-term. Which brings us to our final act. That strong global market didn't just give them a safety net for today. It gave them the confidence to make a massive, multi-billion-dollar bet on the future of energy. The core belief that's driving this entire shift is simple. The future of energy and industrial products is low carbon. CF Industries is making it clear they're not just a fertilizer company anymore. They are positioning themselves to be a key player in the whole clean energy transition. So what exactly are they betting on? Well, it's something called low carbon or blue ammonia. As you can kind of see here, it's a new way of making ammonia, where the big difference is you capture the carbon dioxide that gets created and you store it deep underground so it never enters the atmosphere. And this isn't just some idea on a napkin, it's a massive project called Blue Point. CF has teamed up with some heavy hitters from Japan, JERA and Mitsui, to build a brand new facility in Louisiana. And just look at that price tag, nearly $3.7 billion. It's an enormous investment, and they're set to start major work in the second quarter of 2026. This is their big play for the future. So the crucial question we're left with is this. CF Industries has proven it can make massive profits, and it's proving it can navigate a major crisis. But the real story, the one we'll be watching, is whether this huge, expensive bet on blue ammonia will actually transform a traditional industrial giant into a leader of the clean energy future. I guess only time will tell.